Okay, how's it going, everyone? This is Black Box. So, in this course, in this module, I'll be showing you the screenshots that I took, every one of them, and we will try to dissect um, everything that happened while I tried trading with the two candles Black Box. So, what we're gonna do is we're gonna see everything that happened here. Okay, I'll show you, I'll tell you everything. Okay, and hopefully you'll be trying to grasp something here. Okay, you'll find this helpful. I apologize for these pop-ups, it's just crazy. So let me zoom in on this one. Alright, so as you can see, this is a typical two candles black box. Actually, it can be is classic. This is a classic black box. It can be a classic black box, but if you want to count it as a two candles black box, all you gotta do is dissect it. How do you dissect it? You're gonna select only these two. Why? Because only these two are the ones that are only these two. Let me change this color. Okay, very strong color. Only these two candles. Which one? This one and this one are the two candles. They are similar. Why? They are what? They are hammer, right? So if you know candlestick pattern, hammer is like this one. Okay, the body is found at the upper part of the candle. Okay, this is a hammer. This is what? This is a gravestone. This is a gravestone, the reverse. Okay, this is a hammer. This is a hammer, right? We don't use candlestick analysis here because a hammer signifies a bullish run, but as you can see, what happened? This is a bearish dump, as you can see. It dumped and went south instead of going to the upside. It went to the downside, so we don't really need candlestick analysis here. Black box is different, it is unique, it has its own rules, and that's why you are here, right? That's why you are here. You are here to learn about those rules and hopefully make money, right? So these candles are the only ones that are similar, right? So we don't consider this one, okay? We don't consider this candle, this one, okay? Why? Because it has no friend at all. It has no friend at all. Do you see any candlestick that is similar to this, that has a full body around here, around this black box? No. I don't see nothing. I don't see none. So what do? I only select candlesticks which have similar what? Similar physical property, right? Their formations, their shape, similar shape. Okay, if they have only similar shape like this one. Okay, and these candles they have to have something like this, a doji hammer or something like this. Okay, this is not a full-bodied candle. As you can see, it is a hammer, which means it is only the body is found only on the upper side of this candle. Okay, so I only consider only these two. So what do I do now? I wait. For what? For the third candle. What is the third candle? The third candle is determining candle. That is Third candle determines the direction. The third candle determines if we are gonna enter a trade or not. Alright. The third candle determines if where our TP would be. Okay. Third candle is the most important one. Okay. The TP it can be used as a TP or take profit. Mostly it is TP2. Then next it is TP3. Then afterwards, beyond this, you can trade your stop and then let the other run if you are buying at break even, right? Put your stop at break even and let the other run. Okay, after TP3. If you are selling, put your stop loss at break even. Right here, if you have entered here, put your stop loss down there so that it covers your commission, everything. Okay, everything. If the price comes back up, then you won't worry about nothing. First thing, you took partial at TP2, then you took partials at TP3, and then the rest will be left alone. Okay, you leave the rest, but you drag your stop loss to your entry level. Okay, to your entry level right there, so that you don't get chipped away when the price returns. And trust me, it will return. It will not forever dump. It will not forever pump. Trust me, it will come back. It will come down, move up. It will come down, then move up. It will break this, and now it will come up. Now moves down, then comes up, and then moves down. Okay, that's how it goes. That's how that's the basic market structure right here, right? So this is what happened, right? So these two are the ones that I'm interested in, not this one. This is done. This is finished. This is not a part of the two candles black box, but it is a part of what? The classical black box. What is that? Every overlapping candle, three or more overlapping candles are called the classical black box. Here are all the black box. Okay, you can check my videos on my YouTube channel, right? So the classical black box is this one, the whole thing, right? There is a whole package is a classical black box, but the two candles black box is very specific. It is very specific, and it is uh, it is distinguishable. Okay, it is specific. It is unique. You have to select only a specific type of candle, a specific interest, specific stop loss, and specific take profit. Okay, it is different than the classical black box. So the classical black box, let me talk about this for a moment. Okay, let me differentiate it for you, and we have the two ways, the two candles black box. So two candles black box. Okay, so this classical black box has what? A 5%. It has a 5%. What does that mean? If I want to enter a sale, I have to see this candle, the breaking candle, break it down there and come down there. That's a 5%. From down here to up there is this distance is a 5% for classical black box. But when I enter a trade for two candles black box, the first thing I see is only the previous two candles, lows and highs. This one and the lows and the highs of the previous two candles. I don't care about the previous candles before the two candles. I don't care about that. So what does that mean? It means I will enter a trade exactly halfway of the what The classical black box is 5%. What does that mean? It is half at 2.5%. Don't worry about this. I will clarify it when we go further. Deep. Okay, deep. At 2.5% of our entry. What does that mean? This is our entry. It is the same as our stop loss. Our stop loss will be placed at where? For classical black box, it is at the 5% also. It's the same thing. H1, it will be at the 2.5%. Okay. This is a stop loss. It would be even better if you place it a little bit above 2.5%. If it is this one, if it is 2.5%, it will be better to place your stop loss a little bit above the 2.5%. Why? Because the price can still come back up, make equal highs, hit your stop loss, and then collapse if you sold that thing. It didn't technically break anything. It didn't technically break it. But since your stop is at 2.5% exactly at that number, the price just made equal high and collapsed. Due to spread, you will be out of the trade. You will be out of the trust me. Trust me. So all you gotta do is put your stop loss a little bit above. So the price will not move a tick near your stop loss. So that's a basic difference between them. The other thing is this is the whole thing is the classical black box. Right here is different. It is only the three candles. You only consider only three candles will be studied. Three candles. This one greater than three candles. Greater than or equal to three candles. It can be three candles or more than three candles. It can be 20 candles. No one cares. Only it has to trade well to the side. It has to trade sideways. Okay. So that you can call this sideways movement a black box. But we are specific on the two candles black box. Okay, on the candles black we are specific. So these are the basic differences. And in a nutshell, it's like this. Okay, it's like this. So this is what is signify what I am signifying here. As you can see, this is you can sell here using the second model. That's why I put a dot right there. The dot that you are seeing right there is you can sell that thing using the second model. What do you do? How do you project your TP? You measure from the body if you are trading the two candles black box, and I recommend you trade the two candles black box. I will dominantly teach about the two candles black box. It is specific, it is on target, and it is highly probable, and it is beautiful, and it has a low risk than the classical black box. So we will be using the two candles black box. So this course will dominantly be about, mostly will be about two candles black box. Okay. So as you can see, how do you measure from the bodies to the bodies? So we project it. TP1 would be around there, mostly. TP2 would be around there, and then TP3 would be around there. Okay. When you project the Fibonacci. Don't worry, I will show you on a live on trading view, okay? A live chart on the live chart, how to measure this, okay? It will be clear. This is just the screenshots that I took, okay? I'm just trying to show you that so you will not be surprised, okay? You won't be surprised when you see something like this, okay? Because you already know this happens. You already know it is calculated, okay? You already know it's calculated. You already know what to expect. Okay. So that's why I'm preparing you to for the future. Okay, I'm preparing you for the battle. So you have to pack your stuff and get ready. And okay, train your body, train your mind, and everything. That's why I'm trying to do here. So as you can see, we'll be projecting here. So how do you project it? You measure from the bodies, not from the wicks. The classical black box measure from the equal highs to the equal lows. It doesn't matter if it is a wick or if it is a body. Unless it is equal, we do not measure it. If it is equal, wick, it can be either a wick or a body, we can measure it using it we measure it when we are trading the classical black box or the previous black box, okay, the old black box trading strategy. But here is two candles black box. The two candles black box is different. We measure from the bodies, not the wicks. The bodies are very accurate. We are trading the two candles black box, not the classical black box. So we will be measuring from the bodies. That is the next difference between them. This is from the wicks. It can be the wicks, it can be the bodies, as long as it is equal. Equal. Sorry for my scribbling. It is not readable at all. As long as they are equal, we can use that as a fib extension. Okay. So that is basically it. Okay. That's what I'm trying to show right here. Okay. Using the second model. What does the second model tell us? Second model tells us that this is equilibrium. The price is bouncing between these gaps, right? Between these price levels, right? This price level is equal for both. I mean, it's comfortable for both buyers and sellers. Okay, this place is good. It is good. When they get out of here, they will sometime come back, just like they did here. Okay, they got out of this comfortable place, so they came back again. Where did they refer? Not up there, not up there, not up there, not down there. Exactly, they came back to where they originated, where they started, and then finally continued their journey. Okay, that is called the second model. Okay, that's called the second model. Okay, then that's the second model. That's why I am signifying that. Sell that right there, sell it, and target TP3 and more. That's what I'm signifying there. Okay. And right there is the breaking candle. This one is the one we are interested in. The third candle. That's why I'm signifying right there. That right there, that dot you are seeing here is I am interested on the third candle. Why? Because we are similar right there. This first and the second candle are similar, okay, in shape. So that's why what we are hunting. Okay. So let us go next to the next picture. Let us go to the next picture. Okay, it is zoomed in. Okay, let me zoom out. That's basically it. Okay, as you can see, that's simply beautiful. Simply beautiful. So after hitting TP2, we will be taking our partials right here. So no worries at all. Okay, there will be no worries at all. Jesus Christ, this is crazy. So right here, we got the force mode. So these kinds of things will happen. So I'm trying to prepare you for the battle. Okay, don't think that you will be immune. Okay, don't think you will be immune all the time. There will be losses. So those losses will be due to the force model mostly. The force model does not happen a lot. I have already proved it using statistical data, and you can watch my previous video. I mean, my videos on YouTube. Okay, I have extensively. I have researched extensively on the binary options, on the markets, gold, the dollar shape, dollar card, and euro dollar, pound dollar, all of them. From the 3 months to the 5 seconds time frame, all of it. I have watched it. So you can be rest assured that the fourth model does not happen. So you got 4 models. Okay, 3, then 4. Okay, you already know this, right? So the first model is just equilibrium. This one right there, then disruption. That is called the first model. This is just break. If we are pressed the downside, breaks. There is no retest, there is no nothing. So when you come to the second model, this is equilibrium, then there will be disruption. Bam, will break out. After that breakout, we will be supporting that equilibrium area because that place is special. Then we'll continue to our TP2 and TP3. Based on this black box's height, the target will be determined. Okay, the Fibonacci. Don't worry. I am coming. Uh, I will show you how you do that. Okay. The next, on the opposite side, it will be the same thing. The price will break out of this equilibrium place and then comes back to that equilibrium place, but because that place is perfect for both sellers and buyers. That's a good place. That's a perfect place. So that recoil happened, which means after breaking it, there will be some kind of reaction. So that reaction will be coming back up to the previous comparable areas, and they will continue. So there are many theories suggesting that this is because this is hunting. This is hunting. What does that mean? We are trading here. Suddenly a price breaks out. So everyone will be rushing in and selling. Everyone will be selling right there as a breakout. Everyone will be selling. Sell, 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 rise there, sell, rise there, sell, sell, sell. When they see, they know, the banks know, the sharks know, the institutions, the the hedge funds, and huge, 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 huge traders, proprietaries will be interested in our money. Okay, interested to take everyone's money. So they will recoil the price, they will move the price back up. Everyone is selling, right? Everyone is covering their shorts, right? By putting a stop loss. When that price comes back up, everyone's stop loss will be triggered. Bam, 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 bam. Everyone will be getting out. If you didn't place a stop loss, then they will come deep, deep. That's why I tell you we need the 5%. Still, the direction is to the downside, but what do? Is they bring it back deep. But though, even though they bring it up and break the high of the consolidation of the black box, they cannot break that 5%. They cannot. They won't. If we are on the 2 candles black box, if this thing is happening on the 2 candles black box, this, these people, the sharks, they will not bring it more than the 2.5% halfway. Okay, that's why we are putting our stop loss up there. That area is a safe zone. It is a safe zone. It is a safe zone. Okay, you can be rest assured. You can be sure that your stop loss won't be touched right there. A little bit above 2.5%. They will bring it deep. Then, after taking everyone's stop loss, everyone putting a stop loss up there will be triggered out. But we know how it works. We put it right there above at the 2.5% for trading the 200 black box. For trading the classical black box, what's gonna happen is you have to put it as a 5%. It is a must. It is proven over time and time again. I have proved this shit, and there is no changing. It will not change. It will not change. You have to put it as a 5%. If you are trading the two candles black box, just like this one, this is called a two candles black box. Why? Because as you can look at their similarity, their shape is the same. Yeah, these are two candles. Third candle broke out. Okay, that's a two candles black box. So that's a sale. Where right there is at 0.5%. That's where you sell. Bam. Delivered. Delivered to at least a bit, right? I mean, when you measure this, you gotta measure from the body to the body. Okay. Breaking candle to the previous two candles. So then you determine the TP2. So TP2 was not hit. Okay, as you can see, I measured it right. So this is TP1, this is TP2. Right there. What you are seeing here is TP2 right there. Then what did the price do? It came right back down to where? TP2. That's exactly right. That's what I'm interested in. That's where I'm interested in. That's the place. So they dragged it back down, showing us that they are moving to TP2 in the downward direction. Where did we know that about that? I said right after they broke the law. Right after they broke the law and hit the 2.5% mark of this third model, they brought it down. We know that the direction is the downside. So what do we do? Right there, 1, 2, 3, exactly right there. We sell that shit. Right there, we sell that shit. That price right there is a sale. Right there is a sale. Target is TP2. The previous black boxes and hit TP2 and delivered TP2. That's the target right there. That's TP2. And there is this one's TP2, TP also. So you gotta measure this one's too. Okay. Most likely it's gonna be around the TP1. Then TP2 will be down there. Okay. The same thing. The same thing. Okay. So when we come down, when we come back to here, I'm sorry, my English is bad, so gotta bear with me. Okay, my English is very bad. I mean, it is crazy. So you gotta put your stop loss at 2.5%, right there, and then the banks will now dump that shit. They will dump it. So that's basically the second model right there happening. Second model. At first, it was the first model. Then at the retest, it became the second model. That's the retest. The third model is unique. This is a equilibrium area. Then if we are buying, they will come down there and then they will move it upside like crazy. That's a buy model right there. Or the same thing, come back, move it, and then after showing us that we are in the upper direction, they will bring it down there for a support at this sweet spot, and then they will release it to the upside. Okay, this is the same thing. This is only the third model. This one is a compound. This is the third model and the second model together, but they are all in the same direction, the upside. In the opposite direction, this is the equilibrium. They will manipulate the upside and then they will dump it to the downside. Bam. Right there is the same thing. The breaks the upside and then they will break the downside, showing us that we are moving down. And then there will be support and then moves to the real direction to TP2 and TP3. That's what the third model is signifying. The third model shows us. Then the fourth model is different, a little different. So let me delete this one. Let me put it down there. Okay, the fourth model is around here. So this is equilibrium. So It's basically manipulation in both sides. So a buy, a sell, and then after that there will be a buy. And then when you think that it is a certain model, then they will dump it to the downside. Exactly what happened right here. Right here. Okay. That's exactly okay. This measurement is not right. Right here, which you are seeing. I am I don't know how I measure this one. This fibs leg should be above there, as you can see. The measurement should be above there, not down there. Okay. Okay, so let me erase, I think. Where was it? So, yep, that is clearly wrong. That's clearly wrong. I apologize. So, the measure from down there to up there. Then the TP1 will be around 0 obviously, and TP2 will be down there. It will decrease surely. So after that, then as I told you, they will hit it deep. So they went deep, and then now they are retracing. So it's exactly what happened right here. Okay, it's exactly what happened right here. So correct that with this one. So this is the first model. Right there, what you are seeing is the first one. We add an equilibrium, then a trade down. This one is a trade down. We sold it. We sold it. Right there, we sold it. We made money, finally it came back against us. Then it moved up, just like this one, right here. We bought it again. We bought right there at the 2.5% right there we bought. But unfortunately it happened. It ended up being the first model right there. What do we know that? Right there because our stop loss is located down there at 2.5%. So our stop loss triggered. Now we know that's a false model. So we'll be looking at the other black box like this one, not this one. That is done. That is not done, but in terms of trading, we do not enter trade. But in terms of TP hit, it is not hit yet. So it is not done. We project this one and we trade the new black box toward this direction. Toward this candle's direction, we'll be trading this one. Okay. Alright. That's exactly it. This is the first model for buy selling. For a buy, it would be the equilibrium, then the manipulation will be upside, then sell, and finally buy. Boom. That's exactly. This is deadly. It is deadly. It is deadly. It's very, very awkward. Terrible. It is terrible. For the model, it's terrible. Thank God it does not happen much of a time. Out of 10 trades, maybe two. Two of them will be the false model. That is concrete evidence right there. Two of them will be the two or three. Two or three of them will be the false model. But fortunately, lucky for us, we will be in profit before the false model happens because as you can see we were in deep profit. We didn't, if we had taken if we had took partials and up there, not yet. Little bit profit, we didn't take partial. So we are in profit in both ways, but we are waiting for TP2 and TP3. Okay, that's a minimum. It has to go. The price has to move to TP2 and TP3. That's a minimum. Okay, that's exactly that's force model. Right? The models black box. They work for both the classical black box and for the two candles black box. For the two candles black, it's four models of the black box. Okay, it is in my book. You can check that out. You can read it. Okay, This is exactly what happened. It's exactly what happened, right? Okay, nothing new here. So exactly right there. We got another opportunity. What is that? That is a sale. Where exactly right there? At that candle continuation, we will be selling that. We will be selling the stop loss. We will be upside. Let me stop loss we at 2.5%. Entry at 2.5%. That's right there. That's a sale. Bam. Targeting TP2. Most likely TP2 is near. If it is not hit, we will be leaving the trade. Don't take nothing. We don't touch nothing, so we'll be leaving the trade. Okay. I mean, we will be expecting the trade to come down there to TP2 rising. Okay. That's what's happened here. Okay. So don't forget about the force model. This shows us that we need to be careful. We cannot put our all eggs in one basket. That is the real deal right here. That's the real truth. Okay, that is what you gotta do. Don't put your eggs in one basket. Don't put all your money in this trade, in this sale. Okay, there is an industry standard 2%, 3, 4, up to 5%. That's it. It has to be less than 5%, equal to or less than 5%. Your risk. If you got $100 account, that would end up with a of course we'll talk about this on the risk management section on its own, but I'm just trying to scratch the surface here. So $100, which means on 5%, that's $5, right? $5 risk right there. Until that $100 reaches $500, it cannot increase. It is still $5 risk. Okay, which means minimize your lots. Lots, it can micro, it can be, don't enter in one lot on $100 account. That's it. That's basically it. Okay, that's the first model right here. We have learned about here two screenshots here. So maybe in the next episode, I'll show you the rest of the screenshots. Okay. Yeah, you will hopefully learn a lot with these screenshots. These are a lot of screenshots, as you can see, and it is just beautiful. It's just amazing, and I'll show you everything. Okay, in the next one. Okay, so if I continue more than this, then you will be sleeping. Okay, you will be sleeping. So I don't want that to happen. So I don't want that to happen. So I'll see you in the next one.